and welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani, joined today by Dave Nadig of ETFs.com. Kevin O'Leary of O-Shares with us as well. Markets in turmoil today on trade war fears, with the Dow plunging more than 750 points at its lows. The S&P on pace for its worst day this year. But gold having a great day. The yellow metal now at its highest levels in 6 years off of these trade tensions. And that's got gold ETFs gleaming, the GDX in particular. Gold stocks rallying to their highest level in almost 3 years. How do you get on the gold rush here? Dave Nadig, we have done this many times, you and I, with gold. Remember, gold was a hedge against inflation a few years ago. That went away. Now it's a hedge against uncertainty. I noticed creations of the gold ETFs, the GLD, for example, very high. That means people are actually coming in and actually buying gold, and they're having to put more gold into these gold ETFs.
Yeah, by the amount of gold in the vault, ETFs are at about 8% below all-time highs in terms of the amount they own, which was back in 2012. And we've got all sorts of new buying coming into the market to support this too. We've got central bank buying up 57%. We have all the short interest in the gold ETFs pretty much getting flushed out in July. So really all we've got is demand from folks who are looking for safe haven assets on days like today.
Kevin, you like the GLD, but you also own some physical gold as well. I mean, you actually own physical gold yourself.
I do.
And what's the rationale for that?
A lot of people don't understand that holding the commodity itself has a lot of friction in terms of cost. The GLD itself, for example, is 40 basis points, but it's the most high-volume liquid of all of them. So if you're managing a large amount of money and you say, I keep 5% weighting in gold, I know I'm always going to have 2.5%, so I bought the physical gold, I pay for the storage, which is way cheaper than paying the 40 bips on the trading vehicle I'm using to keep myself at 5. Today, for example, I have to sell down to 5. Gold's gone up a lot. I'm way overweighted, and I'm selling into the strength to get myself back to 5. I can't do the physical blocks. I can't move them out on a trailer. I'm using GLD, but it ain't cheap. It's 40 bips.
Yeah, but you have pointed out many times there is an alternative, BAR.
BAR, the
same thing. It's a vault of gold in it. We have no reason to think anything's different going on there. They're what, 17 basis points?
17 basis points.
One's 40.
Granite shares, gold trust.
Right.
Really exactly the same exposure. If you need the liquidity, if you're moving millions of dollars around in 20 minutes, you need GLD like Kevin's talking about. If you're planning on holding this position for years, you might as well save yourself those 20, 30 basis points.
Explain the difference between holding gold and gold stocks here. We know, of course, in theory, they're related, but gold stocks can also be influenced by the overall movement in the stock market.
Absolutely. It's really
Is there a reason to own gold versus gold stocks right now?
Yeah, absolutely. Do you want to be owning the companies that are effectively digging this stuff out of the ground with all of the single stock risk, management risk, potential for labor problems, et cetera, or do you just want to own the metal? Pros and cons to both. Gold miners in general have been hit real hard in the last couple of years. They've had a bit of a comeback. Gold is gold. It just is what it is.
You don't care about gold stocks, do you?
I never touch gold stocks because you're letting a layer of idiot management between you and the price of the commodity. The history of managers of gold companies is abysmal.
It's not
I'm
good.
just telling the truth.
It's not
good.
It
is abysmal. They cannot control cost of extraction. Why touch that? It's full of volatility and bad management. And please, don't give me the hate mail. I've been saying this for 20 years. They really suck at managing extraction.
Well, what is gold these days? I meant that as a bit of a joke, but I'm quite serious. Years ago, it's going to be a hedge against inflation. That didn't happen, and now it's going up as a hedge against uncertainty. What is it? Is it a hedge against Bitcoin? What is it a hedge against?
If you're a global investor and your opportunity is either buy gold in some form or go buy the Bund at a negative yield, gold looks a whole lot more interesting, honestly.
Sure.
So I think gold's status as a safe haven asset has only gotten stronger in a declining rate environment.